Hi, welcome to the Business Outlook Survey press conference call. I'm Tom Elliott in the Public Affairs Department. With me today is Mike Treving, Senior Economic Analyst in the Research Department. Today we're going to talk about what manufacturing firms had to say about business activity in January. First, Mike will give us a summary of today's report.
Thanks, Tom. Results from our manufacturing survey this month suggest that regional factory activity continues to expand at a moderate pace in January. All of the survey's broadest current diffusion indexes were positive, suggesting continued growth. Firms indicated growth in employment this month, with about 23% of the firms indicating expanded payrolls, and our current employment diffusion index increased 6 points. Price indexes had a mixed performance. On the cost side, input price pressures were only slightly more widespread, but final manufactured goods prices, fewer firms on balance reported price increases, and that index fell to its lowest reading in 8 months. The broadest indicators of future activity continue to reflect optimism about growth for the next 6 months, although most of those forecast indicators continue to fall from their higher readings in recent months.
Thanks for that, Mike. We're going to go to reporters for questions. Start with Steve from Reuters.
Oh, hi. How you doing? Just wondering what things stood out for me was, on the one hand, the new orders was down a bit, but even more importantly, the 6-month outlook slipped. Any disparity there? I mean, it seems like we gained a little bit of momentum this month, but maybe the outlook for the near future has deteriorated somewhat.
Right. On the 6-month forecast, we've seen, softening of those numbers the last 5 or 6 months, after peaking, late last year or mid last year. Those readings are still higher than average readings over non-recession periods. So, and the comments continue to reflect general optimism, but people do use the word moderate growth and tepid growth more frequently in the comments than we've seen. And keep in mind on the current indicators that the activity index is a separate question rather than a composite of the other sub-indexes. So sometimes we'll see that new orders dip a little bit, but still see improvement in the activity index. And this month we saw the shipments index increase a little bit. So, and of course, as I mentioned in the review, the employment index popped up about 6 points. So on balance, all of those current indicators are still positive, and we're summarizing it as continued moderate growth.
Okay, thank you.
Mm-hmm.
Any other questions, Steve?
I think that's it.
All right, cool. I'll go now to Jane from the Inquirer. Any questions?
Hi. Yes, I do. I saw on one hand, there's increased employment, but then on the other hand, work hours seem to be falling. Can you explain the links between those two?
No, and we didn't receive any comments to really explain that, except that December is a slower month in general, and we have to apply some seasonal adjustments. We focus more on the employment index overall, since it's it's one we know that has been correlated with other measures of employment. The work week index is a little more volatile, and of course, if they did indeed expand their workers this month, you might expect some of the work week to fall on. So I can't give you a definitive answer to that, except that you can provide a logical explanation that I just gave.
Okay.
Mm-hmm.
And well, is it just Steve? Is it just me and Steve on this call?
Yes, it is today.
Okay, because Steve probably knows everything about this index, so I don't want to take the time. Well, I just wonder if you could just explain to me, when you look at these various the various measures that you take, which ones are really meaningful to you. Mm-hmm. And I know, like, everybody that looks at statistics has their pet statistic.
Mm-hmm.
And which ones do you like, Michael, and in this report, and what ones tell you the most?
Well, I think the focus of the market, I know, is on the general activity index, and it's the one that we've found to be most correlated with various measures, in particular industrial production index measures. So, and it's general enough too that it allows the respondents to appraise conditions beyond just production. So they, in a sense, weight their own answers to that question, I think, according to what they read as the most important indicators in their companies. And when we ask the companies about that how they respond to that general activity index, that's exactly what they do. They have their own measures of performance in their company month to month, and those measures tend to be different by firms, but are indeed highly correlated with their best measure of activity. So I like the activity index, but of course, we monitor all of the numbers, in particular the prices and the employment indicators. And the 6-month forecast gives us an appraisal of whether optimism is improving or falling somewhat. They're less reliable as forecast indicators, but I think they're still useful in seeing some measure of optimism over time. Since we ask the same questions every month, we have some metric of measuring expectations.
And how do you feel about the fact that it seems to have, even though it's positive, it's a little less positive than it was? What does it
on the 6-month forecast?
I'm just thinking about all the layoffs, the announcements we've seen in our region lately, and Lockheed Martin. I'm thinking of particularly Merck. And how do you factor those two together, that kind of thing together? I'm sorry, Steve, for these questions. I know you probably know all this.
No problem at all. No problem at all. It's interesting to me.
Sometimes we don't have any explanation for how these numbers, especially the 6-month forecasts, move month to month. We look for the comments that the firms provide, and every month we get up to half of the firms that write comments about their prospects for growth over the next 6 months, and that is sometimes helpful in seeing how the sentiment changes over time. But most of the firms did this time just talk about their growth forecasts. Sometimes the special questions that we ask focus their attention away from that 6-month forecast. But this time, most of them did answer about their growth prospects. And as I mentioned in the summary, I think the overall impression from reading those comments is that it's consistent with the indicators, but they're still talking about cautious optimism, slow growth, hopeful growth, if you will. So the comments this month were certainly not inconsistent with what we see in the indicators.
And just one more thing about the comments. Were there comments about the special questions? I was really intrigued by the reasons that they gave. Particularly the lack of training. I mean, number one was just slow sales.
Right. On the special question, we asked a slightly different horizon. Instead of a 6-month forecast, we asked for their 12-month forecast for employment change. And we were a bit surprised to see a fairly large number, 41% of the firms indicating that they expect some expansion in employment over the next year, which is high relative to the numbers we usually see in our 6-month increase employment responses. But nevertheless, they overwhelmed the 10% or so that expected decreases in employment. And then when we ask all of the firms what factors were restraining their hiring plans, not too surprising, the most commonly cited factor, and we asked them to rank 3, was keeping operating costs low, and also sales slow sales growth that was expected. In fact, that by far was the number one most important factor. You can see the chart that we provided in the
Right.
in the release, and the proportion data is also available if you look deeply in our website or give us a call. We can give you the breakdown.
You'll look deeply.
Yes.
What you?
But you're right. We did see a little bit of a pickup in the firms having problems matching skills. That was a little more frequently cited than we've seen in past years. And of course, the uncertainty about healthcare and other regulations, were lower ranked according to this measure, but still prominent in their responses.
Any other
I love the
questions?
measure. There is no restraint.
Right.
Any other follow-up questions, Jane?
I can ask questions indefinitely, but Steve should have a turn.
I'm fine. Thanks, guys.
All right. Well,
Thank you very much.
that was a
you.
great discussion, guys. Thanks for calling in
Take care.
today.
Yep, certainly. Thank
All
you.
right. Bye-bye. All right. Look for next month's survey at 10 a.m. on Thursday, February 20th.